What happens when a company spends over $40 billion on a future that still doesn't exist?
Imagine you put on your glasses or headset and you're instantly in your home space. It has parts of your physical home recreated virtually, it has things that are only possible virtually, and it has an incredibly inspiring view of whatever you find most beautiful.
This is exactly what happened with Meta's Metaverse vision. And the consequences are bigger than most people expected. This is the story of how one of the biggest tech bets in history is still struggling to prove itself. This matters because it could redefine how companies invest in the future and what happens when vision moves faster than reality. By the end of this video, you'll understand what went wrong and why this strategy may have been flawed from the start.
Hey, are you coming?
Yeah, just gotta find something to wear. All right, perfect.
Boy.
Oh, hey, Mark. Hey, what's going on?
Hi, Mark. What's up, Mark?
Whoa, we're floating in space?
Uh-huh.
Who made this place? It's awesome.
Right? It's from a creator I met in LA.
This place is amazing.
Boz, is that you?
Of course it's me. You know I had to be the robot, man.
I thought I was supposed to be the robot.
Whoa.
I knew you were bluffing.
In 2021, Facebook made a bold move. It rebranded itself as Meta, signaling a complete shift in vision. The idea was simple yet ambitious, to build a digital universe where people could work, socialize, and live virtually. And at first, this sounded like the next evolution of the internet. Meta began investing heavily into Reality Labs, the division responsible for building this virtual world.
Billions of dollars were allocated each year, with the expectation of long-term returns.
And as you can imagine, those returns did not arrive quickly.
Wait, where's Mark?
I think he's in the middle of something.
You can already see some of these elements in Horizon workrooms.
Meta launched products like Horizon Worlds, aiming to create immersive social experiences. Users could interact through avatars, attend events, and explore digital environments.
But adoption remained slower than expected, raising early concerns about user interest.
At the same time, competitors were exploring different paths, especially in artificial intelligence.
This created a growing contrast between Meta's long-term bet and faster-moving technologies.
And this is where things started to shift.
For investors, this raised a critical question. Was the metaverse the right priority at this moment?
Because while Meta was building the future, others were already monetizing the present.
All right, so I hope that gives you a sense of some of the technical challenges that we're working on to deliver deep and immersive experiences in the metaverse.
Reality Labs began reporting massive losses, exceeding billions of dollars annually.
And these losses continued to grow, without clear signs of near-term profitability. But this wasn't the real problem. But here's the bigger question. What if the problem wasn't execution, but the timing of the entire strategy? Because while Meta focused on virtual worlds, the world itself was moving in a different direction.
For users, the metaverse still felt incomplete. And for investors, it became increasingly difficult to justify the scale of spending.
And this is where the pressure started to build. Meta began adjusting its strategy, shifting more focus toward artificial intelligence. This signaled a partial pivot, without fully abandoning the metaverse vision.
But a core question remained. Can such a massive investment still deliver results?
Or has the window of opportunity already passed?
The metaverse was never just about technology. It was about timing, execution, and belief.
And so far, that belief has been tested more than expected.
Whether this becomes the future of the internet, or one of the most expensive experiments in tech history, is still uncertain.
For more deep breakdowns like this, subscribe to the channel.